Assalamualaikum and hi. So this is our team members.
Assalamualaikum and hi. My name is Nur Shuhazliana and we will start with introduction. What is Islamic banking? Islamic banking, also known as Islamic finance or Sharia compliant finance, is a financial system that adheres to Sharia Islamic law. Its fundamental principles include the sharing of profit and loss and the prohibition of lenders and investors from collecting and paying interest. The Quran, Islam's central religious text, serve as the foundation for Islamic banking principles, which are governed by fiqh al-mu'amalat, the rules governing commercial transactions. Islamic banking is a culturally different form of ethical investing as it prohibits usury and speculation, known as maisir, and charge interest on loans. What is maisir? Maisir is totally prohibited by Islamic law Sharia on the grounds that the agreement between participants is based on immoral inducement provided by entirely wishful hopes in the participants' minds that they will gain by mere chance with no consideration for the possibility of loss. Additionally, investments in prohibited items or substances such as alcohol, gambling, and pork are prohibited. Islamic banks use equity participation arrangement similar to profit sharing to generate revenues instead of charging interest. If a bank lends money to a business, the business repays the loan without interest in exchange for a percentage of the bank's profits. If the company defaults or fails to make a profit, the bank is not paid either. The origins of Islamic banking can often be attributed to the Middle Eastern merchants who began conducting financial business with European counterparts in the Middle Age. They began by applying the same financial concepts as the Europeans, but as trading networks advanced and European nations began opening local branches of their banks in the Middle East, some of these banks adopted the regional traditions of their newfound home, chiefly profit and loss sharing system and no interest financial system. These European banks were able to meet the demands of Muslim company owners in the area by implementing these procedures. Early in 1918s, Islamic banks opened in Western Europe even though the bulk of these institutions were established in Muslim nations. Furthermore, Iran, Sudan, and to a lesser extent Pakistan have built national interest free banking systems.
Hi, Assalamualaikum, and my name is Fatimunira binti Muhammad. So, let's move to history of AFFIN Bank. AFFIN Bank Berhad established in 1975 years as a Perwira AFFIN Bank Berhad, originally focused on providing machine banking service in Malaysia. The bank's initial operations centered around corporate advisory service and treasury products. In 2001, a pivotal merger with DSN Commercial M. Berhad expanded its scope into a commercial banking, enabling AFFIN Bank to offer a broader range of financial service to both corporate clients and retail customers. This strategic move was followed by the bank's listing on Bursa Malaysia in 2005 under the name AFFIN Holding Berhad, making a significant milestone in its growth trajectory. Since then, AFFIN Bank has continually involved in emphasizing digital transformation and innovation to enhance customer experience and operational efficiency. Today, AFFIN Bank operates as a subsidiary of AFFIN Holding Berhad, maintaining a strong presence across Malaysia with a comprehensive suite of banking products and services tailored to meet the diverse needs of its clients. So let's move to the principle of AFFIN Bank. The first one is tawarruk. Tawarruk is a financial transaction in Islamic finance that involves buying a commodity from a seller on credit and then selling it to a third party for cash at a lower price. This allows the buyer to obtain cash quickly without engaging in a traditional loan transaction, which is prohibited in Islamic finance due to the prohibition of interest or riba. Tawarruk is commonly used in Islamic banking to provide liquidity to customers while complying with Islamic principles. The second one is wakalah. Wakalah is an Islamic contract wherein the client, also known as the principal or muwakil, supplies the capital and give the bank, also known as the agent, permission to act on his or her behalf by investing the money in profitable and Sharia-compliant ventures. Before signing the wakalah agreement, the principal or muwakil and the agent or wakil might agree in advance on the approximate profit amount that the investment could bring in. A wakil or agent oversees the wakalah account. Next, the third one is wa'ad. Wa'ad is a term in Islamic finance that refers to a unilateral promise or undertaking made by one party to another. It is a commitment to perform a certain action or fulfill a specific obligation in the future. In Islamic finance, wa'ad is often used in a contract to provide assurance or security to one party regarding a future transaction or event. It is important to note that wa'ad is not a binding contract in itself, but rather a promise that may lead to a formal agreement or contract in the future. The next one is al-ijarah. Al-ijarah is a term in Islamic finance that refers to a leasing or rental contract between a lessor and a lessee. In an al-ijarah contract, the lessor agrees to lease an asset to the lessee for a specific period in exchange for rental payment. The lessee can use the asset for a predetermined period, after which the ownership of the asset may or may not to be transferred to the lessee depending on the term of the contract. Al-ijarah is common Islamic finance agreement used for a various purposes such as leasing equipment, vehicles, or property, while complying with Islamic principles that prohibit interest or riba and unethical transaction. The last one is a bal al-saf. Bal al-saf is a term in Islamic finance that refers to currency exchange for foreign exchange transaction. It involves the buying and selling of currencies at current market rates. In Islamic finance, bal al-saf transaction must comply with Sharia principles such as the prohibition of riba, interest, and raha, uncertainty. In Islamic finance, institution may offer currency exchange service to facilitate halal transaction for their customers.
Assalamualaikum and hi, my name is Putri Mahaswani and today I will tell about AFFIN Islamic Bank. AFFIN Bank Berhad completely owns AFFIN Islamic Bank Berhad, which was formally established as a stand-alone Islamic bank on April 1, 2006. After being incorporated on September 13, 2005. Small and medium-sized businesses, institutional, retail and corporate clients can all take advantage of the entire range of Islamic banking products and services that AFFIN Islamic provides as a fully functioning Islamic bank. Innovative and Sharia-compliant goods that incorporate a range of Sharia ideas such as musyarakah, muntanakisah, mudarabah, istisna, ijarah, murabahah, and others have been introduced by AFFIN Islami. In order to effectively serve the needs of retail and corporate companies, the bank's products and services clearly distinguish between deposits, investment accounts, and loans. And for the product of AFFIN Islamic Bank, first we have card, which is credit card, such as AFFIN Islamic Credit Card, AFFIN Cash on Call Installment Plan. And for the debit cards, we have AFFIN Islamic Visa debit card and AFFIN Visa debit card. And next, for the financing, we have auto, which is AFFIN Islamic Vehicle Financing and AFFIN Islamic Vehicle Financing for the variable rate. And for the home, we have AFFIN Tabaruk Home Financing and AFFIN Home Step Fast. And for the deposits, we have savings account, which is AFFIN Barakah Charity Account I and AFFIN Grow I Savings Account. And for the current account, we have AFFIN Grow I Current Account and AFFIN SMEG I Premium Standards. And lastly, for the investment, we have AFFIN Emas I and AFFIN Emas Account I.
Difference of Islamic bank and conventional bank. First features, operations. For Islamic bank, follow the principles of Sharia as guided under Islamic law, in addition to the conventional banking rules and regulations. For conventional bank, guided by conventional banking rules and regulations, and not necessarily based on Sharia concept. Second features is arrangement. Islamic banking includes trading and profit sharing arrangement between the capital provider and the user of funds. For conventional bank, based on predetermined rates of interest in its lending and borrowing activities. Next, features is restriction. For Islamic bank, there is a restriction in dealing with Sharia compliant activities, namely riba, qarar, maisir, and haram. For conventional bank, there is no restriction to deal with Sharia non-compliant activities. Alms giving. Islamic bank have to pay zakat annually based on income and the value of wealth or assets. Meanwhile, for the conventional bank, do not have to pay zakat but must pay the tax on its net income.
The next features is penalty. For Islamic bank, penalty charged due to overdue payments cannot be recognized as income and must be channeled to charity. Compensation charge on actual costs are allowed and subject to a maximum of 1% per month on overdue installments only. For conventional bank, penalty overdue charge are recognized as income and it can be based on the outstanding amount including outstanding installment and compound interest. Consideration for Islamic bank is given to Sharia objective, which is Maqasid Sharia, in addition to protecting the interests of shareholders. Consideration for conventional bank, the interests of shareholders are important. For Islamic bank, income based on a profit-sharing basis or profits from trading transactions such as sale-based, lease-based, equity-based, and other fee-based contracts. For conventional bank, income based on interest received from loan and borrowing transactions. And the last features is relationship. For Islamic bank, the relationship status with customers is buyer sellers, lessees, partners, or principals agents depending on the Sharia contracts. And for conventional, in relation to the lender-borrower-customer relationships.
Next is the AFFIN Bank achievement.
In a conclusion, AFFIN Islamic Bank Berhad, which is AFFIN Islamic, a subsidiary of AFFIN Bank Berhad, was established in the Cut. In conclusion, AFFIN Islamic Bank Berhad, which is AFFIN Islamic, a subsidiary of AFFIN Bank Berhad, was established in 2005 and became an independent Islamic bank on April 1, 2006. On 1st April. Tengok lagi sekali boleh? Plastik. Ready. In conclusion, AFFIN Islamic Bank Berhad, which is AFFIN Islamic, a subsidiary of AFFIN Bank Berhad, was established in 2005 and became an independent Islamic bank on 1st April 2006.
It offers a range of Islamic banking products and services to various customers. AFFIN Islamic is introducing innovative Sharia-compliant products, requiring trusted expertise for successful implementation in today's modern economy. AFFIN Islamic Bank is an Islamic financial institution using Sharia principles, while AFFIN Bank is a conventional financial institution. AFFIN Islamic is better for Muslims seeking current savings, personal and housing loans. Islamic banks are prohibited from engaging in such activities and are instead focusing on capital use in the real economy to promote socio-economic justice.